Should you listen to all investor advice? In this video, I'm going to be talking about how to process investors' advice because founders come to me with this problem all the time. This investor tells me this thing, and this investor tells me that thing. And should I listen to this investor? They get feedback from their pitches and all that stuff. And okay, it's important to gather all investment advice, but how you process that advice, that's going to be the difference on whether you're going to be a successful founder or not in terms of raising capital, as well as keeping your sanity intact. Because, well, here's, as you can see right here, that it's important to take all investor advice with a grain of salt. And I'm going to give you 3 key points for you to consider in terms of listening to the investors. I hope this is going to be a short video, might not be, but just arm yourself. And every time you pitch an investor and you're getting advice, because investors love to give advice, especially if you ask them for money, because of some of the things that we're going to talk about here, take it with a grain of salt, load this up, and in essence, I say develop a soft heart but a thick skin. To do this, you're going to have to develop a very, very thick skin in terms of the feedback that you get and how you handle it, but at the same time, have a soft heart, empathize with the investor, and at the same time, have some self-compassion because you're going to get beat up, and it's okay to say, oh, that was really tough, and I'm not having a good time. It's okay to say that. All right. Okay. Should you listen to all investor advice? Let's take a look. So the first thing that you need to understand is power dynamics. Anytime you enter a situation and you've got power dynamics and there's advice given, then that advice needs to be taken with a grain of salt according to the power dynamics that are at play. For example, I am an executive coach, certified executive coach. When I'm talking to a client, there is an implied power dynamic. There's 2 types of power dynamics that happen. One, I have power because I'm considered the expert. So I have to be careful of what I say because my client may be like, oh, if Ed says that, I need to go do this and stuff. And I might have just been shooting off the hip and not thinking about my words. At the same time, they are the client. If they start talking to me about, oh, and they start dangling the contract on top of in front of me, and they start to say, well, you let's talk about your contract. I'm going to change the way that I act. I'm going to change the way that I interpret because the power dynamics could affect me. So when you are pitching to an investor, there's an implied power dynamic there, which is not healthy, that the investor has all the power. I always say that you should get to the point where you have equal power, that you see that you actually level the playing field as power dynamics concerned, but that doesn't always happen. So a lot of investors, they let it get to their head. They say, I can write some checks, and they do have power to write that check or not, but they need good investments. They need a good founder to invest in. So that's where I really enjoy when a founder starts hitting that traction and investors are calling them, the tables are turned, right? There's a different power dynamic at play. So you have to analyze that power dynamic. And so when the investor says, I've got the power here, well, they feel very comfortable in giving you all different types of advice on what they would like to see or what they think. And they could have not a very nice agenda, or what's happening is they may off the cuff say, I wouldn't invest in something like this, because I prefer this. And then you take that because of the power dynamics and you say, well, then you start leaning into it, and you start changing your pitch, or you start changing, or you change your product. Like you go and you have this big crisis and the crisis of faith in yourself. And what do? You start pivoting your startup because one investor that you consider have lots of power, right, has given you some off the cuff advice that they're not telling you so that you can go change it. They're just telling you what they think, right? And so, like a lot of times, investors will start to throw their weight around, and I don't enjoy that. I don't enjoy watching that. I don't enjoy exploring that. I just rather hear you say no, and then for us to move on. At the same time, sometimes investors, legitimate investors, will watch to see how you interpret those power dynamics. And if an investor says something and pushes back on you, and you just kind of lay down and say, yeah, you're absolutely right, and what was I thinking? The investor's going to think, what's wrong with you? Like, you're going to be dealing with power dynamics all the time. So if you don't have the courage, and you don't have the intestinal fortitude and the courage of your conviction and the confidence to push back on the power dynamics here, then I'm not going to have confidence that you're going to build a 300-person company and get this to $1 billion and go unicorn. Because guess what? The power dynamics get even worse because politics get involved and, all those things. So you have to understand how to manage power dynamics, and therefore look at who has the power, how do they perceive the power dynamics in the interaction. And if they're like, they're poor founder, all this stuff, then most likely take their advice with huge grains of salt, lots of grains of salt. Okay. Clear out, the bag of salt there. And, in terms of how you're interpreting that advice. The next thing is financial incentives. And this, to me, is kind of the darker side of professional capital. I trust people who are non-professional investors a lot more because their financial incentive is very straightforward. They're like, okay, if I put in my $50,000, $100,000, when am I going to get my money back? That's my financial incentive. So what it comes down to. So when we talk about financial incentives, I appreciate conversations where, non-sophisticated investors who aren't working with professional capital, they say, well, am I going to get dividends, or how's this going to work, et cetera? It's just very straightforward. Their financial incentives are very clear. I invest money in you, the investor invests money, the founder makes money, gives the investor return. When you get into professional capital, and this goes back to power dynamics, these go hand in hand to get married. When you get into institutional capital and you're dealing with a general partner, they've got LPs, limited partners. They're not working with their own money. They're raising a fund. On top of which, you know how they make money? Management fees. Okay. They don't make money based upon you generating a return unless they've got their own money in the game, which is important for you to understand, right? But when you're talking with someone, they're working with other people's money. Let's say they've only put in like, $1 million and they raised like a $50 million fund. Well, that's a very small percentage. They don't have the same financial incentives as the LPs. So now there's power dynamics between the LPs and the GP. The LPs are yelling at the GP saying, where are you going to put my money? When are you going to get the return? And so the financial incentive for a general partner of a fund is the management fee. So guess what? They're going to want you to take a whole bunch of capital, use it, grow your startup. This is how the way it used to work. Grow it so that they can tell everybody, look at these growth metrics, look at the velocity of momentum. Has anybody made any money yet? No. It's all on paper, but they're going to push you to spend more on Google ads and, like advertising and customer acquisition and all that stuff, so they can show those growth metrics regardless of whether you're profitable or not. And then, so what's going to happen? Then they go, look how much your startup has grown. They're going to go and say they've invested in the seed round. They're going to go pitch it and say, hey, you should do the A round over here, because when the A round money comes in, their financial incentives, they look good. They're going to go raise more money and say, look at what we've done. We invested in these future unicorns, and they're going to make their money off of managing the money versus helping you build your startup. Think about it for a second. It's just one of these sort of things where I think founders get duped by the VC industry in thinking that, the VCs are your friends. They're not. They're investors. And I heard this term, like Simon Sinek, he talks about the difference between mercenaries and missionaries. There are some investors, legitimate investors, that are like missionaries. They put in their own capital and they genuinely want to help you. But then there are mercenaries who have just figured out how to efficiently play the VC game. They are not your friends. They are not there. They're not there, going to help you. And so when they give you advice, where's that coming from? Are you going to take that and you're going to measure the source, and you're going to think, what are the financial incentives here when they give me advice? And so an investor drops in and goes, you're not growing fast enough. And you say, well, we're growing fast enough to maintain profitability. And they go, no, that's not going to work. Don't worry about profitability, grow at all costs. Think about where that advice is coming from, right? And a lot of founders get caught up in that. So understand the power dynamics, who thinks they have the power, where the power actually is. Legitimately, there's always power dynamics. Sometimes, hopefully, you as the founder has the power, but most of the times not, because you've conceded the power dynamics. And then look at the financial incentives. What does everybody have to gain there, and how linear, like how short of a distance and how straight of a line is it? If it's all convoluted in the way that it works, then you will, yeah, like you'll know how to handle it. I think founders ask me some very astute conversations because I'm the general partner of an alternative, accelerator, alternative funding accelerator, and we've got capital, and it's got a certain investment thesis, and our institutional funding partners, our LPs, if you will, they want the capital deployed and accessed in a specific way. And so I'll come up with terms, and a great founder will ask me, how do you make money? Which I'm very happy to have that conversation. They'll go, I know where your investors are going to make money, but how do you make money based on these terms? And I think that's very fair, and it's very astute that founders ask that question. You should be thinking the same way. So, as convoluted as it may get, understand the venture capital game, understand how it works, and it's changing, by the way, especially with these market conditions. I think we're going to see, like, VCs operate in a different way. Some will continue to operate the way that they've done. There's always going to be, that type of capital out there, but work through the financial incentives. Okay. That's the salt, how you handle and you process that advice and know how much salt that you need. Finally is joy. And this is part of my own investment thesis of working with capital and what I think represents the future potential of the unicorns, the billion-dollar startups, even the trillion-dollar startups. It's the joy. Let me define joy. Joy for me is, the feeling of motivation. So that you're motivated to be with someone in your strength, but especially your weakness. Joy is the person that you want to go, like when I have a really great day at work and I finish the deadline, I beeline it to my wife and I celebrate and I say, I want to share my joy with her. She gives me joy to share, right? But when I've had a really crappy day and I'm like, this is not going to go well, I suck at this, etc., I want to go talk to my wife, put my head in her lap, and I say, I suck. She strokes my hair and says, there. She doesn't try to fix me. She doesn't, give me advice. She just goes, it's going to be okay. It must be tough. And she empathizes with me. That's joy. I'm motivated to be with her in my strength, but especially my weakness. Okay. Now, if you got power dynamics, financial incentives, there's going to be times where you feel extremely weak as a founder. You want investors that can hold space with you and that are not going to stick it through your eye. You're not going to give them an inch and share that, like you give them an inch and share how you are struggling a certain way, and they put it right through your eye, and there's no joy. If you have investors that you dread and you have no joy to go talk to and share your struggles or share and be transparent and say, look, and I'm not saying be inappropriately transparent, but as a founder, listen, this is what we're dealing with as far as your money. Or the other side is, I've had investors like this, where I'm like, I don't care if they make any return. I don't want to celebrate my victories with them. When something good happens, I don't want to tell them, like, F that. Like, I just don't want any part of them interacting with me in my life because there's no joy there. Well, that's a nice sign as well. So you'd rather have investors that, oh man, we just got our first paying customer, or we just, passed this milestone of $100,000 in revenue, or our 1 million user. I want to tell these investors, et cetera. And they're like, yeah, type thing. At the same time, it's like, oh man, we just got attacked by a competitor, this and that. You know what? I'm just going to let them know. And they're going to say, you know what? If you want to hear from us and you want our opinion, more than happy to share that. But yeah, them's the breaks. That's tough. We've been there before. We trust you. You'll figure it out. Those are the types of investors that you want, right? And those are the missionary investors. The mercenary investors, they may, jump down your throat. And that's where the friends, family, and associate investors, this is where I do get weary about them, because a lot of times they don't have, like I was listening to a poker player, and he was, a professional poker player. And he said he loves playing poker with people who are like millionaires doing other things, because he said they can afford to lose the money, because, and that's the reason they play poker. So he likes playing poker with him because he's a professional poker player. He makes money making money off those guys, and then they lose money and he wins. That's his livelihood, right? And he's like, I love playing poker with people who are smart enough to make money outside of poker. Implying that he's not smart enough to do anything else. But it's the same thing with investors. When you've got people who don't have enough money and they're not making enough money, and so they invest their $25,000, $50,000, and they watch you potentially lose it, and they start jumping down your throat. Like, I've received death threats, okay, of non-sophisticated investors, people who just invested money in, this was my fault. I shouldn't have taken that money. I should have seen it, but power dynamics, financial incentives, I got to get that money in. That was money they couldn't afford to lose. So as soon as they lose $5,000, they are texting me, messaging me, all these things, making my life miserable. Absolutely no joy whatsoever. I have no joy being a founder, no joy interacting with those people. And then I'm really crying in my wife's lap or on my therapist's couch. I've spent copious amounts of time and money in therapy because of power dynamics, financial incentives, my relationships with investors who suck the joy out of life, right? So if you don't align these things, you don't understand how to interpret investor advice based upon these three things. And there's always context. Research the investor, find out where they've come from and the types of deals that they've done, so you understand, are they sophisticated? Are they in my space? Are they professional capital or not? Because if you don't, you're not going to know how to deal with that advice. And it's going to affect you in all sorts of wonky, wacky ways. And you're just going to be one of these janky founders that, is blown around in the wind, and you're not going to be able to build anything solid with a good foundation. You've got a good foundation, you get roots deep down and stuff. You can have all sorts of, winds and conditions and stuff like that. And, your tree's not going to, fall over. Or, what they say is, the taller you want to build a building, the deeper you have to put that foundation. Get that foundation deep. Know who you are, self-concept, all the emotional intelligence skills, get people in your corner and get a foundation of joy, and the people you want to be around who are going to support you, and build that foundation deep. Put some solid, bulletproof foundational stones, cornerstones in your startup in terms of revenue, growth. Know your stuff, like know your shit is really what it comes down to. And then you can build a massive startup on top of that with all the investor money that you want. It's not going to affect you. Hope this has been helpful. Take all investor advice with a grain of salt, understanding power dynamics, financial incentives, and the whole joy of the situation, what I call the joy effects, and see what happens. I think you'll learn a lot. Hope this has been helpful. Startups.com, online accelerator, founders, accelerating other founders. We're all one big community. Check us out. If you're already part of it, thank you very much. Make sure you leave a comment and ask any questions. I always appreciate making these videos. I make these videos based upon my advisory sessions with all the founders at startups.com and in our investment portfolio. Once again, hope this has been helpful. I appreciate you checking this out. See you in the next video.